Hello, I'm Dave Gentry. Welcome to Small Stocks and Big Money. You know, every day our analysts are on the hunt for small stocks that can provide big returns for patient investors. Investors who also have an appetite for risk. Smaller cap stocks are the riskiest asset class, and they are also the most volatile asset class. And mainstream media simply does not cover these stocks. Stocks like MusclePharm, which is up over 100% since appearing on my show 4 months ago. Galectin Therapeutics, a NASDAQ company, which is up over 100% since their first appearance on my show. But never put all your money in smaller cap stocks. Remember, some of the companies appearing on my show are RedChip client companies, meaning they pay us a monthly fee and sometimes in restricted stock to represent them. So I can be biased at times. However, I am looking for fundamentally sound companies with strong management with a large market opportunity for their product or service. Now, before we go to an interview with the CEOs of 3 public companies, I want you to see an interview with Marc Robins, one of the top microcap analysts in the business. He's also featured, by the way, in my forthcoming book, Microcap Superstars. I'm here with Marc Robins, the CEO of Catalyst Research. Marc, thanks for being with us today.
You're welcome, and my pleasure.
You are a pioneer in microcap research. You were actually the founder of RedChip. You were putting coverage on names like Starbucks in the 1990s. Tell us how you got into microcaps.
Well, back in the late 70s, I was an analyst out in the Pacific Northwest, and we only had about 5 major corporations out here. Everything else, and there was about 100 of them, were either small cap or what they call today micro cap. And so, I just got accustomed to following a lot of little teeny companies, everything from, Bank of Alaska to Pay and Pack to Payless Northwest to Heister and on up, to Weyerhaeuser. And I never followed Boeing, but the whole gamut of companies in the great 6, 7, 8 Western states. So that was the genesis of the research, and my boss said, "Hey, you got to get focused on something," and so I said, "Okay, I'm focused on small cap." So that's how it came about. Right.
Now, what is your essential criteria? What do you look for in a microcap stock, Marc?
Well, probably the number one thing is a management team that I like and can trust and feel good about. Guys that I can talk to. The one thing that you really have to know about microcaps is the CEO, and is that the right guy? And if you can't look into the soul of them or through their eyes to their soul, it doesn't make any sense to follow it. Sometimes they don't talk, but that's okay too. You can learn from just their surroundings, their behaviors, and so forth. Then I also look for very large opportunities, catalysts, such as the name implies, but also catalysts that would make the realization of that opportunity, big opportunity, is a realization. And so we're always looking for big, small companies that could turn into big opportunities, like Starbucks. Who was to ever think, And then lastly, things like the balance sheet, returns, all of those other are potential. I mean, nothing in the microcap world is ever really great from a balance sheet financial standpoint, but they can grow into greatness. And that's been the case again and again and again. So it's really down to 3 or 4 little factors like that.
Well, you've had some great picks over the years. I still talk to fund managers and stockbrokers today, and they remember some of your picks from RedChip. Daktronics, Winnebago, MarketWatch, of course, Starbucks. These are all names that you and your team discovered or were early to put research on. What are some of your picks today, Marc? What do you like today?
Well, that's a tough one. Let me go kind of through the gamut. One that's been working well for the last 2-3 years is California Amplifier. It's the old CalAmp, and that's what they call it now, CalAmp. Stock CAMP. We picked it up about 75 cents to $1.20. It's now knocking on the door, 11, 12. I do own the stock. You need to realize that. We have done research in the past, but they've really changed themselves from an internal turnaround from a satellite company to a wireless company, and they're becoming very, very prominent in that latter area with better margins. Something that we like, kind of a more developed name, is Greystone Logistics. This is a 45-cent stock. They ought to do 7-10 cents this year. This is a May year, probably 15 to 20 cents next year. It's a green company that's profitable, good management, owns a lot. You know, another one of these companies that just nobody has followed, but you can talk to the manager and really see something down the road. By the way, pallets are like $1 billion, $2 billion market. So, I mean, there's a big market there. My favorite story, and I own that one as well, my favorite story, and one I've done research on, one I own a lot of stock in, one I've done some consulting with, is this Athlon Medical, which I know you've done some work on. They're right at the cusp. They're at the FDA getting their IDE for a device. They're treating patients in India for hepatitis C with remarkable results. And then lastly, this last year, they've taken advantage of their cancer capability. The CEOs at MD Anderson today talking to them about potential opportunities and creating new not diagnostic, but treatment therapies in conjunction with other therapies. So the stock is, 10 cents, 11 cents where it's been forever, but I think it's about a time to break out.
Well, Mark, we certainly appreciate your time today, and we want to have you back on soon. Today's show will feature interviews with Profire Energy, a profitable, fast-growing company operating in the energy sector, Lattice, a cloud computing company that provides prison phone systems to state and federal prisons, and NovaBay, a biotechnology company developing next-generation antibiotics. Our first company is Profire Energy, a company that provides burner management systems to oil and gas companies. This profitable, fast-growing company recently announced that it is projecting $4.2 million in net income for the current fiscal year. Their technology addresses $1 billion industry serving some of the largest oil companies in the world. Now let's go to an interview with the CFO, Andrew Limpert. I'm here with Andrew Limpert, the CFO of Profire Energy. Andrew, thanks for being with us today.
Thanks for having me on, David.
Now, you have a very interesting technology that serves the oil and gas industries. Very large companies use your technology, allows them to meet certain environmental standards, safety issues. Tell us about the technology.
Well, the technology is used in the process of purification of oil and natural gas. So what happens, just to give you a little background, is that oil is taken out of the ground. It has impurities in it. Natural gas could have water in it. It has to be dehydrated before it can be shipped. Okay? So that process, that purification process, requires heat. It requires flame. The fuel goes through a big furnace, and we regulate that heating process. We regulate the temperatures and the flame as it's being heated.
So your technology is really software and thermostats for these large oil fields that are burning off this impurities in their natural gas and their oil. You generated $15 million in revenue in 2012 with $3.5 million in net income. That's 20% net margin, so net margin's very, very good. Revenue's a little bit off in fiscal 2013, which actually ends March 30th. You invested heavily in the U.S. Tell me why you invested in the U.S.
We see a great opportunity in the U.S. Look at our operations in Houston, Texas. A third of the wells in the United States happen to be in Texas, so it's a natural fit for us. So we find opportunities everywhere. There are 4,000 independent oil and natural gas producers in the United States. That's a ripe opportunity for this technology.
And there's 1 million plus oil wells in the U.S. and Canada. All could use your technology.
That's correct.
Why is Exxon, for example, using your technology and not one of your competitors?
Well, we think we provide a complete solution to the combustion process. So not only is it safe, not only is it friendly from a green technology standpoint, but it's also very efficient. We're actually measuring the amount of heat that the combustion devices, the furnaces, have to produce. And so instead of running a furnace for, say, 24 hours a day, you could run it for 6 to 8 hours a day, and that puts money right in the end user's pocket.
And I wanted to note that the U.S. will be the largest producer of oil by 2020, surpassing Saudi Arabia. So this market opportunity is very large and growing.
It's a tremendous opportunity, and we recognize that.
What happens for you the rest of this year?
The rest of this year, we continue to grow. We've invested heavily in sales and marketing and inventory controls. We're looking for ways to continue to, on a timely fashion, satisfy the needs of those big and growing oil companies.
Again, you're a first mover in this field. This is a relatively new regulatory area in Canada. The U.S. is not caught up with Canada yet. You're ahead of the curve by planning operations here. Tell us what happens to your revenue, your net income, 3 years from now.
Well, management is focused on growing operational earnings. That is a function of expanding our footprint. We would like to expand into other states. We would like to be there as far as a service provider at the locales where oil and natural gas is being produced. You look at North Dakota, you look at Pennsylvania, those are natural areas for our expansion. So what will revenue and earnings do? I wish I could predict that exactly, but I know that as we execute, and we do so with the commitment that we've shown in the past, that our operations should grow.
Again, first mover status in a regulatory area serving a very important need. This company has 3 patents on your technology. You're offering a better solution.
That's correct.
Do you expect that you will continue to grow internationally other than the U.S.?
Well, we have a distribution relationship with a company in Brazil, and we would continue to expand internationally. We would look at countries like Australia and New Zealand. Those are natural fits, maybe someday even India.
Well, you're at the right time, in the right place, with the right technology. So look forward to following your company.
Thank you very much.
Thank you. My value proposition, great technology, huge market opportunity, very strong growth, profitability. Put it in your portfolio, and yes, Profire is a RedChip client company. We receive 5,000 restricted shares each month with a 6-month holding period on the stock. Call us right now to receive a free research profile on Profire. 1-800-REDCHIP extension 0. Don't wait. Join the RedChip Nation today. Go to our website at redchip.com. Sign up for our weekly newsletter, the RedChip Money Report, and receive the best information on the best names in smaller cap stocks every week. For serious investors, sign up for the RedChip Plus Investor Package. It's only $9.99 a month. Here's what you get. All RedChip research profiles, 48 hours before non-paid subscribers. Free access to our specialists Monday through Friday, 8 to 5 p.m. You can ask them any question about any stock in the RedChip Nation by calling our toll-free number. Free access to our CEO conference platform, $175 savings, and a free copy of my forthcoming book, Microcap Superstars, which will teach you the secrets of the pros like John Papa John, Phil Frost, Barry Honig. Call us now. Go to our website. Sign up today. Our next company, Lattice, a true penny stock, a cloud computing company that provides hardware and software to prisons for phone systems and other integrated services. $10.8 million in revenue, and this stock is trading at 11 cents. Profitable in the third quarter of fiscal 2012 and expecting profitability for the full year in 2013. This stock should trade at 4 times sales based on peer group comparables. That would put the stock in the 70-cent range on 2012 revenue. Now, Lattice is a RedChip client company. We've received 500,000 shares of Rule 144 stock. That stock is now free trading. We can sell that stock, and we may sell that stock to cover expenses even as you buy the stock. However, we believe this is a long-term hold, and we will certainly hold some of our stock for the long term. Now, I hope at much higher prices. Now, let's go to the interview with Paul Burgess, the CEO of Lattice. Paul Burgess, CEO of Lattice. Thanks for being with us today.
Thanks for having me on the show.
2.4 million inmates in the U.S. You provide communication services to prisons. Tell us about your business model.
Well, our business model works in 2 ways. The first way is we provide a cloud-based computing system that allows inmates to make phone calls to friends and family, allows them to get other services through the correctional facility, allows the correctional facility to use investigative tools. So it goes well beyond just telecommunications. It goes into other services that we provide through our cloud-based system. The way we generate revenue is really through 2 streams. One is on a transaction basis when inmates make phone calls. Friends and family can deposit money on their accounts, and that's a prepaid account, and we get a portion of that communications revenue. The other way we generate revenue is through licensing our technology to other service providers, not only within the U.S. market, but internationally as well. We've just started to branch out into the international market as of the beginning of last year.
So you are a technology company. You're a cloud computing company, so these prison systems use your software, but there's also some hardware, these kiosks.
Correct. So our system provides more than just telecommunications and the software that I mentioned. It also provides a kiosk system where inmates can go and look at their accounts, order services. People can come into a facility and actually make deposits on an inmate's account. And they can also do things such as video visitation through our kiosk systems, where they can visit with an inmate through video, where the videos are recorded. They can also download services to that inmate that he can view through the kiosk in the prison.
And you currently serve about 10,000 beds or 10,000 inmates through your platform. Why are prisons choosing your platform over your competitors?
Well, a couple of reasons. First of all, our system is one of the most reliable and best engineered on the market. We have a strong track record of good engineering. We've had a long history of engineering on the communication side of the business. The other side is we have a cloud-based system, which allows us to provide a whole suite of services, not only to large correctional facilities, but also to small correctional facilities. So services that were traditionally reserved for large facilities, now we can make those same services available through our cloud-based solution to small correctional facilities as well.
How many patents do you have on this technology?
We currently have 2 patents, and we'll be applying for 4 to 5 more patents this year.
And I want to note that you've said publicly you now have an agreement with TELUS, which is one of the largest telecom companies in the world based in Canada. Tell us about that relationship.
Correct. So TELUS chose us last year to help provide them communication services and communications technology in a secure environment to correctional facilities. They have a contract with BC Corrections that we're implementing now, and that system will be up and running in the second quarter of this year. We've already begun installation.
Paul, what is the essential value proposition for investors today? You generated about $10.7 million in revenue in 2012. Why should investors consider buying your stock now?
Well, first of all, the communication side of our business has grown 60 to 70% year over year. And we just got back into that market in 2000.
But what does that mean, the communication side of your business?
The technology business that we've been discussing, we actually have about 70% of our revenue coming from that business. We had a government services division that was decreasing in revenue over the last 3 years.
You're getting rid of that.
Yeah, we're getting rid of that. We've actually sold that as of just this quarter, and that's behind us now. And now we're focused specifically on the communications business.
So one sentence, why should I own your stock now?
Because it's grown 60 to 70% year over year since we got into this market, and we've just begun to start to execute on our business plan. This really is the ground floor.
And I'll add this, $2.5 million market cap, over 10 million in revenues. Your revenues are 4 times that of your market cap. Cloud computing companies traded 3 to 4 times sales. Just on last year's sales, if you trade at that multiple, the stock is 70 cents. It's 8 cents today. Huge upside.
I agree.
Thanks for being with us, Paul. My value proposition. This is a no-brainer. An 11-cent stock today with revenue of $10.8 million, trading at a $3.7 million market cap, not even 40% of its revenue. This is sort of like an option. You can get rich on this stock. Put it in the portfolio and hold. Potential gain, if it reaches our target price of 70 cents, 700%, 800%. Now call us right now to receive a free research profile on Lattice at 1-800-REDCHIP, extension 0. Don't wait. Join the RedChip Nation today and go to our website at redchip.com and sign up for our weekly newsletter, the RedChip Money Report. Our final company today, NovaBay Pharmaceuticals, on the New York Stock Exchange, a clinical stage biotechnology company. NovaBay is developing a very disruptive technology in collaboration with its partner, Galderma, which is one of the largest biotech companies in the world. The disposal of antibiotics into the environment each year helps increase antibiotic-resistant bacteria. NovaBay aims to replace the retired and resistant-prone antibiotics out of the market. Revenue, $6.7 million. Cash in the bank, somewhere around $12 million. Let's go to an interview with Ron Najafi, Chairman and CEO of NovaBay Pharma. Dr. Najafi, thanks for being with us today.
Thank you.
Now, you're the founder of a company called NovaBay Pharmaceuticals that has developed a new generation of antibiotics. Tell us about your technology.
So, Dave, I think I'd like to expand on that and tell you a little bit about antibiotics, where antibiotics come from. Almost 150 antibiotics we have today, they all are creation of bacteria, virus, and fungi and mold. In fact, 1929, Alexander Fleming discovered that bread mold essentially has the ability to kill staph on Petri dish. And because of that, he won Nobel Prize. And of course, that ushered in the golden age of antibiotics. Since that discovery, 150 additional antibiotics have been discovered. The life expectancy of humans have gone up significantly. And World War II was the drug of choice for saving soldiers. And so it's been an amazing, it's a miracle drug. Unfortunately, over the last 80 years, we see more and more drug-resistant bacteria. And you open a newspaper, you open television, there's drug-resistant bacteria everywhere. And so we're putting a lot of pressure on the environment by throwing these antibiotics into the environment.
Your technology, you're creating compounds from mammals, from humans, from animals, from insects.
Right.
And these are much more resistant to infection.
Right.
And will replace traditional antibiotics. Now, you're partnered with Galderma, one of the largest pharmaceutical companies in the world. Galderma and Big Pharma have given you $80 million over the last 12 years to develop this technology. You're in a phase 2 clinical trial right now, partnered with Galderma. Tell us about it.
We are in the middle of a number of pivotal trials for skin infection, for eye infection, and we're also in urology infection, certain urological infection for spinal cord injury patients.
The 3 phase 2 clinical trials.
Exactly.
The one with Galderma is for the treatment of skin disease, $400 million market. Why did Galderma choose you? Why did they give your company $26 million?
So Galderma is committed to the future of dermatology. They're the largest dermatology company in the world, owned by Nestle and L'Oreal. I think they see the future of topical antibiotics and treating infection of skin in our technology. And they have invested significantly in the development of this technology. And they're right now running the trial in impetigo. We're not paying for that trial. Galderma is putting the money for that trial. In ophthalmology, we're running the trial. That's a 500-patient trial.
You're treating conjunctivitis in that trial. It's a $500 million market, $400 million, $500 million market for the treatment of the skin disease, billion-dollar markets. Why should investors look at investing in your company today?
We're extremely undervalued at today's market value. We have roughly $17 million in cash. We don't need to raise money for the next 18 months. We believe the value of the cash we have in the bank and the value of technology ahead of us is significant. In biotech, data drives value. We're going to have significant catalyst over the next 9 to 12 months.
Positive data, the stock's not $1.20. Positive data, the stock is going to move upward. And you are in a great place right now. And thank you so much for being with us today.
Thank you.
My value proposition for NovaBay Pharmaceuticals, partnered with Galderma, a major pharma company. $1 billion market opportunity for its products. A revolutionary technology. Near-term clinical data coming. Fully funded. And look at the institutions in this stock. They know something. They know something. 31 institutions. This is a very, very positive sign. I like everything about this situation. It is a good buy at current levels. Now call us today, 1-800-REDCHIP, extension 0, to get a free research profile on NovaBay Pharma. Don't wait. Join the RedChip Nation today. Go to our website at redchip.com and sign up for our weekly newsletter, the RedChip Money Report. And again, receive the best information on the fastest growing smaller cap stocks in the nation. Now, the companies we looked at today all offer significant upside. Profire Energy, you can buy this stock for $1.30, $1.35 historically. A very profitable company. It's just invested heavily in building its U.S. operations. Fortune 500 customers in the oil and gas industry that use their burner management systems. RedChip research target, $2.15, upside 80%. Lattice, as I said earlier, an option play. 11-cent stock with $10.8 million in revenue. Patented technology, one of the most stable industries in the United States. Prisons, 2.5 million inmates, all of whom want to talk to someone. Our research target, 77 cents. Current price, 11 cents. Upside, 700%. NovaBay Pharma, developing a new generation of antibiotics, partnered with Big Pharma, positioned now to benefit from potential significant upside based on data coming later this year. I give it a buy. We do have RedChip research on this company. Target price, $5. Upside, almost 350%. Now remember, balance your portfolio. Don't put all your money in smaller caps. They are the most volatile asset class. While gains can be substantial, both in the short term and long term, you should also be prepared for the downside. Remember, I'm not always right. Neither is RedChip. Neither are the best analysts on Wall Street. Give us a call today, 1-800-RedChip, extension 0, to order a free research profile on any of the companies featured today. And visit us at redchip.com. Sign up for our free weekly newsletter, the RedChip Money Report. And for those of you who are serious about making money with smaller cap stocks, sign up for RedChip Plus. That's right, join the RedChip Plus Club. Receive all RedChip research profiles 48 hours before the general public, before non-paying subscribers. You'll have the right to speak to our specialists and ask them any question on any of the stocks in the RedChip Nation, Monday through Friday, 8 to 5 p.m. You'll also receive free access to our CEO conferences, $175 savings, and a free copy of my forthcoming book, Microcap Superstars, which will teach you the secrets of the pros. Only $9.99 a month. Go right now, redchip.com. Sign up for RedChip Plus. If you're not completely satisfied within the first 30 days, receive a full refund. Again, it's only $9.99 per month to be part of the elite RedChip Nation. Call us right now. Get serious about making money in smaller caps. Dial 1-800-RedChip extension 0. Again, I'm Dave Gentry. Small stocks, big money. Thank you. We'll see you next week, same time, same place.